Welcome back. Thanks for staying with us, and happy Friday. President Trump's sweeping global tariffs, well, they sent U.S. stocks tumbling for a second straight day. The markets fared even worse today. I want to bring in Mark Zandi. He is the chief economist for financial services company Moody's Analytics. It's great to see you. Thanks for joining us. I want to start with what you posted on X, which reads as follows. It's on my piece of paper. My aging eyes are going to have to squint a little bit, but let me read it. If the 25% tariff is fully implemented quickly and largely maintained, and U.S. trading partners retaliate approximately tit for tat, the U.S. and global economies will not suffer a depression, but they will suffer serious recessions. Walk my audience through that.
Yeah, I mean, the 25% tariff is massive, huge, and if the other countries retaliate in kind or even come close, we're going into recession. You know, the simplest way of thinking about it is the tariffs are a tax increase. It's a tax increase on American consumers, American businesses, in the form of higher prices that people have to pay for the goods that they're purchasing. And if you do the arithmetic, this kind of the static value of the tax increase is $600-700 billion. That's over 2% of GDP. The last time we had a tax increase that large, Major, was in the middle of the World War II to pay for that war. That's how big it is. And it's going to be incredibly difficult, impossible for consumers to digest that. And the other thing to point out is it's a very, what economists call regressive tax, because the burden is highest on the folks in the lowest and middle parts of the income distribution, because they devote a higher share of their budget to those imports. The well-to-do, they get hit, no doubt, but it's less impactful. So it fundamentally, that's what's going on here. It's just a tariff. The tariff increase is a big tax, and I don't see any benefits to it. I really don't. I mean, there's been a lot of arguments as to why tariffs are potentially a good thing. It might bring manufacturing jobs back. You know, it might reduce the budget deficit. You know, it's more fair. None of them resonate with me. The bottom line is, if these tariffs remain in place and other countries respond, I'd buckle up. We're going in.
And speaking of buckling up, Mark, one of the commentaries I've heard is in the immediate aftermath of the tariff announcements and retaliation, supply chain might just seize up a little bit because people are not sure what they're paying, what they're ordering, and that could have a secondary inflationary impact. Is that something that you're also watching?
Oh, absolutely. I mean, the thing is, these tariffs are very complicated. You saw the poster board that the president showed and all the varying tariffs, and you know, for people who have supply chains that cut across those countries, trying to figure all that out and you know exactly what the best way to navigate the tariffs, you know, it really complicates things enormously. And as such, I wouldn't be surprised if we have problems with supply chains. You know, the transportation distribution becomes much more problematic, and that drives up the cost. But you know, in the grand scheme of things, that's kind of a sideshow. That's small potatoes compared to, you know, all the other damage this thing is doing. And in fact, the damage is obviously already mounting. Take a look at the stock market today and yesterday. Add it all up, we've wiped out $4 trillion in American household wealth. $4 trillion. You know, I know most stocks are owned by folks that are well-to-do, but they drive the economic train. They do most of the spending, and I'm sure they're looking at their screens and saying, and at their 401ks, and wondering whether they need to get more cautious on their spending. And I suspect they will, and that's the fodder for an economic downturn.
And Mark, before I let you go, how would you evaluate this mixed message thing that comes from the White House? Either they're a negotiating tool or they're a permanent reset of the global economic order.
You tell me. I mean, is that any different from kind of the messages we've been hearing along a lot of different levels? You know, everything from the tariffs to Doge to, you know, you name it. So, you know, the message here is, you know, very unclear. And Major, this is why people are so unsure and so nervous. I mean, the collective psyche is on edge. Even before Liberation Day and the higher tariffs, confidence was already on the wane. You know, you can imagine how people are feeling right now. So, you know, the mixed messages is really making what's, in terms of dollars and cents, hard to digest. But trying to figure it all out also just adds to the angst.
And Mark, very quickly, if you're a company, small, medium, or large, trying to make some future, over-the-horizon decisions about investment, what are you doing right now?
You're not going to invest in the United States. I mean, what are those tariffs going to be next week? What about next month? What about 3 years from now when the factory you're going to invest in today actually comes to fruition, or 10 years from now when that factory's still producing? Because you have no idea what those tariffs are going to be. They're done by executive order. They could be changed by a stroke of a pen. And by the way, they could be illegal, and we could find out 3 years from now they're all struck down. So are you going to make an investment based on having no knowledge of what the tariffs are going to be because they're so massive? No, I just don't see it.
Mark Zandi, always a pleasure. Thank you, sir.
Sure thing.